Rebecca, I wanted to start with you and just understand how you think the market has changed in terms to investing over the last 3 years.
I mean, it's shifted massively. I've been working in this industry for nearly 10 years, and I have experienced the very early stages of the sustainable investment industry, and pretty much being laughed out of the room when asking big investors to think differently about the way that they're making their decisions and bringing in ESG factors into the way that they are thinking. And, you know, that has shifted dramatically just in the last 18 months. So, I mean, in the last quarter, Q2, $112 billion of money flowed into ESG funds. And in that same period, 177 new funds were launched. So that's a huge number. So the amount of money globally that's in sustainability focused funds is now over $2 trillion. And those shifts and those increasing flows that we've seen in the last 18 months or so is a real representation that investors are beginning to shift their mindset and wanting their money to generate return, but also wanting their money to create impacts or positive outcomes for a sustainable future. And COVID definitely has been an accelerator of that. I think the COVID pandemic has been a real reminder of how reliant we are on healthy, well-functioning societies, and the impacts that it has on us personally if that flow of success doesn't work as expected. And so I think it has become very interconnected, in that people are more conscious of the social impact that they are having, and also how their money is having that impact as well. So what we've seen more recently is a shift from, you know, we've moved slightly further away from governance focus, which was the real initial stages of the ESG industry, probably at least 3 years ago and more, into E, with the climate crisis becoming far more to the fore of governments, regulators, investors and companies as well. And also individuals becoming far more aware of the climate crisis. And what we've seen with the COVID pandemic is that awareness of the S element of ESG. And I think that is certainly going to continue. So we are going to increasingly focus on the S, but I do feel that with the lead up to COP26 this year, and the meeting of all the governments around the world to try and get us really to meet the 1.5 degree emission targets, that we will refocus our attentions on the E element far more. But gone are the days of ESG being a fad or a fashion.
Wow, it's really interesting. I didn't realise just how much of inflows had gone into that market. Jennifer, what kind of opportunities is that opening up for your investors and the people that you're dealing with?
So it's a really exciting time. It's also a complex time. And I think sometimes investors get a bit overwhelmed. So what we've seen right now, as Rebecca was saying, is an increased desire by investors to explore this universe and to invest in it. But I think one of the challenges that the fund managers have is they've been launching sustainable or ESG themed funds now at a very, very fast rate to take advantage of that interest. But that almost makes it a little bit more difficult for investors to almost see the wood for the trees. And so I think one of the interesting things for us is how to guide clients through that process. And there's no doubt that we are not at an end point where this is all sorted. We're very much on a journey. And that journey is really about how do we start looking at risk and how do we take advantage of opportunity. And so the flows that are going into, for example, things like clean energy, that's really exciting. But we also always have to keep in mind what Rebecca was saying, that financial side of it. People do want to make a return in this part of the investing sphere. And so I think for our investors, it's very much about how do they look at the risk, how do they find those opportunities, and how do they find fund managers who are successfully taking advantage of that while keeping in mind the ESG initiatives that they want to be involved with. So, for example, if we look at at sort of ways the market can sort of shift. We look at something on the S, it's a little bit harder to quantify maybe than E. So E is quite easy because you can have very clear metrics like carbon footprinting. People can calculate the net zero position of their portfolio. But governance has always been something that's been core to the way fund managers look at companies. S is a bit difficult because for us, S is something, let's take for an example, the Boohoo case, where Boohoo was selling very, very cheap clothes. And then the market found out that they were not paying the workers who were making the clothes even the minimum wage. They were paying less than the minimum wage. And so what happens is the share that price of Boohoo all of a sudden has a real ratchet down. So it's about trying to look to find those risk points and avoid them. And it's about trying to find opportunities where new innovations are coming out. So as I said, it's quite exciting. It's a new way of looking at investments for some fund managers, and other fund managers have been doing this for years and years. And I have to give a shout out for the fund managers because they've really invested tremendous amounts in the last 3 years to beef up their teams that are looking at these areas, to creating internal processes about how they analyze underlying stocks and how they put together their portfolio. And as I said, coming up with some really interesting new products. And no doubt the next few years we'll see even more shifts, more sophistication in those areas.